that and don't rush into anything, especially around the news as you start to see the market potentially get volatile. So let's look at what that is, and then we'll get over to having a quick look at what's happening in the Forex side of things, the crypto side of things, and then the futures side of things. So news, two sets of news coming up. First is here in about 30 minutes, we've got a consumer price index for the U.S. It's U.S. news, but the U.S. dollar news can be impactful across the market. So if you're trading Forex, even though we're seeing some nice opportunities right now coming into the session, we've got some nice divergence. Euro versus the yen, pound versus the yen, maybe even euro versus the CAD. There's some interesting stuff happening right now, right as we first get started here in the morning. However, I would caution you, unless you're scalping and you're looking to make a quick push, you're just looking for a quick in and then out on, for a couple of pips on some of these currency pairs. Be aware that as we get up to that 7:30 mark, 8:30 Eastern mark, there could potentially be first widening spreads, because market makers are going to take off where they're willing to buy or sell, so spreads are going to widen pretty much across the board. And then there could be some potential movement, whether that's just whip, as the news comes out and is consumed, or a break and go. We don't know what it's going to be, but it has the potential to be pretty highly impactful. Later today with the FOMC, that's the same. And there's also crude inventory. It's interesting. Crude is a yellow report today, which it typically is. That has the potential to be very impactful as well, especially if there's a big delta between the actual and the forecast. If inventory comes out showing that there's an increase in inventory, or we have a surplus, that could send crude straight down, and which again would have ripples throughout the market. So, but the red reports that you're watching, especially from a Forex standpoint, FOMC and the CPI, could be very impactful. But I think those, depending on what's happening there, those could send some shockwaves to the market as well. So we'll see what becomes of it. Obviously, as you would any day, trade cautiously. But we certainly want to make sure that we're not taking any positions ahead of that news in hopes of front running what the news is based on what we think should happen or what we feel should happen. Let's let things happen and then take an action based on what our charts tell us and our trading plan tells us. I for one personally feel like we're coming for a big correction again, but I don't let that, I should say I don't. I try to keep that from impacting my personal trading decisions every day as we come into the market. You need to have a plan of specific things that we can look for and look at in order to take an action. Those should be quantifiable. It shouldn't be my gut says blank. It should be something quantifiable. This has happened, therefore this needs to happen, and then this can happen in order to take a trade. So anyway, without going down that long path, which we've talked about many times before, and I'll talk about many times in the future, let's just run through this, and I'll let you guys get on with your day. So anyway, long and short of this whole thing here, news is coming up. News is coming up in 26 minutes. Has the potential to be very highly impactful to us. If not something that causes an impact with that just break in movement based on whatever comes out of this report, it most likely will be impactful simply from spreads widening and the market chopping around leading up for the minute or two leading up to and shortly after the actual release of the report. All right. So despite what we're seeing on all of this, save it. Don't take any kind of an action on Forex until after this news occurs, and then mark your calendars to be aware that we're having more really high impact news around the FOMC statement and then following press conference later this afternoon. Right? What does that mean for the crypto side of things? Well, crypto has been on a channel. We see, Ethereum and Bitcoin has been trading in a pretty tight channel now for a few days, and we've got highs. Wow, I just said Bitcoin and Ethereum, and I only have one of them up here. My charts must have reset, but anyway, same thing, just different levels. Trading in a pretty tight range here for quite a few days now. We've got tops in Ethereum at around 245, and we've got a bottom kind of established over here around 240. We're still in a long bias on Ethereum, and the same in Bitcoin. Bitcoin's got a top around 9,800 and a bottom around 9,600. So in a channel, bias is still long, and we'd be looking for at this point breaks of this top level to go to take it longer on both of these, or could look for pullbacks down to the 240 area, or pullbacks down to around 96 to see if we can take it longer. Really, I think if you're looking at pullbacks, you might even want to look a little bit closer than that. You might want to look around 241 on Ethereum, and you might kind of cap your bottom down here at around 96.70, 96.75 for Bitcoin. The interesting thing is if the bottom falls out of the market again, that while in theory you'd think money might be piling into gold, money might be piling into alternative investments as well. Reality is when and that's typically been the case before, as we've seen money flows just kind of intraday, the crypto markets kind of followed similar to what gold would do. So it was kind of seen as a safe haven, right? An alternative investment, take money out of here and put it in cash. In this case, it was in crypto, right? But that hasn't really been the case here recently, as we saw last time. Money, we had a big down. Money flowed out of gold because people were covering shorts. Same thing over here in crypto, as we had a big down in the overall markets and stock markets and in our indexes, right? We saw money coming out of crypto as well, probably to cover positions in other markets. We'll see if that holds true this time, but we are still looking. We are still in a long position. So as I've said before, until the market tells us something otherwise, no matter what we think is coming, because a lot of factors are stacking up that we're going to see another down. But until we actually see it, until we actually see that happen, we keep trading what the charts tell us to trade. And in this case, we've still got a long bias on both of these. So if you certainly could set it up to look for breakouts in both directions over here. As opposed to just looking at right now, we'd really be just looking for long opportunities because the bias is long on both of these. You could, though, if you wanted to trade both directions, you could just bracket this in and say, if we break above 245, I'm going to buy it. And if something pulls us down, below, really probably if you're going to look to break out low, you might want to break out a little lower than 245. You might want to look below that, down here around 237. I'm sorry, not 240, 240. If you want it lower than 240, you might want to look at 237 area. See if we, for your short, but you could look to buy if it breaks above 240 and then short it if it goes below 237. That would require you to have a margin account somewhere, which would mean that you may have to go through some steps to set up an account outside of the U.S., which we haven't talked a lot about here on this channel. I've had some private discussions with people that wanted to get into margin trading on crypto, and there's some hoops you have to jump through in order to set up accounts because of the U.S. regulation on what we can trade and how we can trade it. Remember, your money is not really your money here in the U.S. Bitcoin, same thing. We'd be looking to buy if it breaks above 9,800. We'd be looking to potentially buy a pullback if it gets down to 96, right? But if you're more inclined to say, hey, I think things are coming and I just want to prepare myself on both sides of this, you could look for breakouts and say we're going to break above 9,800 to buy. But if it breaks down below 95.50, then I'll look to take it short from there, and prepare yourself that way. So a couple ways to go. So a couple opportunities to go there. Over here on the future side of things, we're still in upward trends. If we look at the S&P, our bias is long. The 4-hour bias is long. The 30-minute bias is long. However, for the last few 4-hour sessions, we do seem to be finding a top over here at 32.30, basically 32.25. We seem to be finding a top here. It's been rejected. However, with that said, 3,200 has been finding a lot of buyers. We're finding a lot of buyers off of 3,200. So it's been a pretty solid level of support. I mean, even far down is 31.95, which is where our support level has been drawn. But we're seeing within this channel quite a bit of support down here at 3,200, which we're continuing to look at long opportunities. The 30-minute, it's pulled back significantly in off hours the last 2 days, and then floated back up during regular trading hours. We'll see if that same thing occurs today. Floated back down. Of course, it hit 3,200, 31.95, and now it's pulling back up, still in off trading hours outside of the regular session. Regular session begins in about an hour and 20 minutes, which will be post news for the CPI, but pre-news for the FOMC. It's very possible that today we won't see much movement until we get up to that FOMC statement. We could just chop around in kind of a range today. Be careful with that. Be aware that we could see a bit of a range. We'd have to potentially look for smaller moves, or look to cover our risk pretty quickly. So this would be one of those days for me where I'm still going to look for long opportunities until I'm told otherwise, right? So what I'm looking at when I look at the charts here is I'm looking for agreement, right? My 30-minute, just simply looking at moving averages, right? Looking at a short-term moving average and a long-term moving average to determine my bias. So the 4-hour bias is showing me that it's long. 30-minute bias is showing me that it's long right now. However, if this green line, which is my short-term moving average, crosses below my red, which is a long-term moving average, if those two cross, that's going to tell me the bias is mixed. And I won't be looking for longs anymore. I won't be looking for anything because the bias is mixed. So keep that in mind. However, with that said, I will be looking for longs until that changes. And the way I'll be trading it today is I will still be watching for those pullbacks. And just like we showed yesterday, just exactly like we showed yesterday on the end of day recap, we'll be watching for pullbacks to see if the market pulls back, and then I'll be trailing my entry points at the tops of the previously closed candles. And I do that for the first couple hours in the morning. If we get past that and we're leading up, into that noon time frame Eastern, we're getting closer into FOMC. If the market hasn't given us any real opportunities, I'm not gonna, keep trading at that point. We'll wait and see what comes out and watch for it tomorrow. When I do, if a trade does occur, and we are pushed into a trade, I'm going to look to manage my risk pretty rapidly by ratcheting off risk at the bottom of those previously closed candles as well. So and doing that on a 5-minute chart. I'll be timing my entries on an M5 over here. So I am going to look to try to take risk off the table quickly, because I have a feeling that today will be one of those days where we get some level of chop leading up to FOMC, and with that, I want to be able to take profit fairly quickly, or at least cover my risk fairly quickly to create some break-even trades, giving opportunity to the upside, but taking off that risk quickly. So it may end up that we just don't even have any trading opportunities as well. So we'll see what actually occurs, but that's the plan for the morning. Over here on crude, looking at crude, if you've got a larger account, you can trade crude. What we'll be looking at here is a mixed bias. So the 4-hour bias is long, but the 30-minute bias is short. We've also got big crude news here in about 2 hours, right? So be aware of that. But for right now, biases are mixed. It's telling us, hey, don't do anything. Sit on your hands. The bias is mixed. We don't have a real trading opportunity. Gold, again, biases are mixed. We're back in an upward trend on gold. On the 30-minute, we've cracked back above 1700, and we've seen it run up. We're hanging around 1730 right now, which is our next level of resistance at 1732. So, we'll see what happens with gold. But, if you're trading gold and, the 4-hour trend is down while the 30-minute trend, or I should say trend bias, the 4-hour bias is down, 30-minute bias is up. So with that said, until the 4-hour is confirmed to be up as well, this is telling us same thing, sit on our hands. So the only thing that we could potentially trade, obviously crypto, we've obviously got the S&P over here, and then post news, we've got opportunity here in the Forex market. But other than those, crude and gold are out for potential opportunities, and I certainly will be cautious today, leading up to FOMC. So we'll see what comes of that. Maybe it's nothing. Maybe it's just another big rah-rah fest, and we just push the market higher. We'll see. Very well could be. But until that happens, we trade what's on the charts. Right? We're going to trade what's there, what's on the chart, not what we think is going to happen, not what we hope is going to happen, not what our gut's telling us, not what cousin Ned told us. There has to be a quantifiable reason for why we take a trade, and then that reason needs to be, once you're in a trade, you need to have a plan for how you're going to manage it as well. Don't make it up on the fly. Determine what you're going to do before you enter the market, so you've got a plan, right? All right, so I think that's it for the day. We're keeping it fairly short. I'm not going to go into depth on any specific training topics or anything of that nature. We do have that small account challenge that we're working on right now. That's the one that we're tracking every day. And so Monday we didn't have any trades. Yesterday we did 5% on it. We'll see what happens today as, if we have tradable opportunities, or, if I end up sitting on my hands, I'll let you know as we get further in. The plan right now, based on what we're seeing on the charts, though, is to look for long opportunities. If we do pull back, shortly after the CPI, if we do pull back, that'll, probably mix the bias between the 30-minute and the 4-hour, and then we'd be sitting on our hands anyway. But who knows, right? Who knows? It's all about having a plan. Keep it simple, but execute the plan. All right? So that's it for now. We're going to keep working this same. We'll keep doing the small account challenge, until we, more than double that account, and then start diversifying it. But I think next week we'll get back into some actual training topics and work on a specific topic again for the week as we go through those, just to help people along that are looking to get started, looking to create some strategies, looking to create their trading plan, so on and so forth. We'll get back into doing some direct topics on that stuff as well. All right, so anyway, that's it for me for now.